Introduction. For a long-term investor, commodities are almost always a waste of money and time. I'll explain why I don't hold commodities in my portfolio and what realistic alternatives exist if you want both safety and growth. Unproductive assets. Commodities are unproductive assets. A stock is a share in a business that produces goods and generates profits. A bond is a loan and which you receive interest. Real estate can be rented out to generate income. What about gold? A barrel of oil? They just sit there waiting for someone to pay more tomorrow. They don't generate cash. You are speculating on price increases. Whether you hold them physically via ETF or through futures, the essence is the same. They produce nothing. Why I avoid commodities? Zero internal income. Stocks pay dividends, bonds pay coupons. That's the real money you can invest. Commodities pay nothing. They're bets, not investments. Wild volatility. Oil, gas, and gain prices depend on geopolitics, weather, technology, even logistics. Today oil is $100, tomorrow it's $15. That's a roller coaster, not a reliable investment. Hidden costs. Holding commodities is expensive. Physically, you pay for storage and insurance. Via ETFs, you face contango. When the next futures contract is more expensive than the current, the fund loses money on rollovers. Even in the commodity price raises, net returns can be negative. Poor inflation hedge. The myth of gold as a perfect inflation hedge doesn't hold in practice. There have been decades of high inflation when gold fell or stagnated. Its protective power is inconsistent and unpredictable. Complex instruments. Most commodity ETFs are not simple funds, but derivatives that are tied to futures and swaps. Counterparties risk mismanagement, and you might not even know what you really own. Low long-term return. Over long horizons, stocks tend to rise because businesses create new value. Commodities over centuries in real terms barely change. You will see spikes, but over 20-30 years, equities and bonds almost always outperform. Why my portfolio has no commodities? I want capital that works, not just lies dead. Passive income from dividends and coupons is something commodities don't give. I avoid unpredictable risks. I can't forecast Brazil weather or OPEC decision. I prefer businesses I can analyze. I bet on human progress, not metal. Companies innovate, drive the economy, generate profits. That's the foundation of growth, which commodities lack. What I put instead of commodities. Here is what makes up the core of my portfolio. Broad equity exposure. You capture global growth, diversification, low fees, and dividends. This is the main engine of capital. Government bonds of developed countries. A real hedge in crisis. When equities fall, high-quality bonds often rise. Stability and predictable income. Stocks of resilient companies. Businesses win with strong models and consistent profits, not tied to commodity prices. This combination gives growth, income, and protection without trying to guess what copper will cost tomorrow. So here is the conclusion. Commodities are unproductive, volatile, and costly. Their role as inflation protection is deeply overstated. For long-term investors, they are more lottery than strategy. I choose assets that create real value and deliver income. How about you? Do you hold gold, silver, or oil ETFs in your portfolio? Tell me why I keep them. Maybe your case is worth analyzing.